What's up, YouTube? It's Todd O'Shea with Tasty Tracker, and I've got another small account challenge update today. It's unfortunate. It just keeps getting worse a bit. So we're down now to about half of what our account started off with. The plus side here is that we have these positions, although they don't have much value now. If we were to actually get some green days here, it could jump fairly significantly. Now, we did lose some money when we're rolling positions, and so we'll get into that here. You can see now the expiration on all of these is 4/16. And if you don't know how to roll on Robinhood, and I think I have Tasty Works as well, I have videos on those, but the process isn't too bad. I'll link to that in the description, but just know that we went through that process here, and then we come over here to Tasty Tracker. Stop. And you can see it has this one here. That means I rolled it. If I click on the adjust button, we can see there's two entries down here at the bottom. And I can just hit edit or delete if I need to change the most recent entry. So basically we can see here, I kept the strikes the same, but the expiration is now 4/16 instead of 3/19. There were no commissions because this is on Robinhood. But basically what you want to do is come in here. You can hit fill to sort of expedite the process a little bit, and it will just fill in everything that you had done last time. So say it's a month from now and we need to roll it out to May, then we can go ahead, click fill, and then click the date, and we could leave everything else the same and change the credit or debit that we had to pay or receive in this box here, and then hit save. So that's really all there is to rolling a position in Tasty Tracker. Now we can see, since we had to pay, let's go back into that. Since I had to pay $40 to get into plug in the new position, that means my premium went from $195 down to $155 since I paid $40, which means my break even here is going to change. So you'll see me do sort of two things most of the time. Either I'll adjust to this new 50%, which would be 0.78, or I'm just going to go ahead and close for around what it was to open it, maybe a little bit less. So maybe I would aim for 150 just to get out of the position fairly green, but basically is a waste of time. That's not necessarily the most efficient thing to do with your money. It could be more efficient to close out for a loss now, enter in a better position either in this ticker or another ticker, and be profitable on that instead of trying to hold on to this position. It is a little bit of a psychological thing, so you really have to determine what kind of trader you are. Maybe you would like to just close out the previous one instead of rolling for a debit. Normally I would not recommend paying that much to roll, but I feel like everything is okay in the market, and it's oversold to a point where we could have a bounce up. But we went ahead and rolled just to give ourselves more time. Now we have 43 days instead of the 17 days that we had before, 15 days, just to be overly safe, to make sure I have plenty of time for this to come back in. So let's go ahead and look at SPY. I mean, at this point I said in Discord it's going to come down to 370, and sure enough it came down to where's the low here? 371.88 was the low, looking up here. So it did bounce pretty nicely off of there. However, at this point, because we've broken under the 15-day, I'm going to assume that we're going to drop the whole way down to the 100-day, which is at 367. It's this green figure over here, 367.56. Whether that happens tomorrow or the next day, coming up here next week. Certainly doesn't have to do that. It can bounce whenever it wants to, as always, but typically you're going to see it likes a cleaner stopping point. So it is what it is. Okay, so let's go over to plug. Now, rolling, you could do a whole bunch of things. I could have kept the expiration the same, but sold the call side, which effectively would have been an iron condor that collects more collateral, more premium, but does not require more collateral. So you get more money, but you don't have to take any more away from your buying power. But because I chose to roll it out, you can see my buying power is less than what it was. And again, to be as explicit as I can here, you're increasing the max loss here. So before this was something like 260 and now it's 305. So you're potentially making a bad situation worse by rolling. So it's really important to understand that if we can roll for a credit, that's why in the Tesla roll for the Robinhood example, I put in $1 credit. That's obviously ideal. And ideally we would do that on a day where SPY's up and the ticker is up. And but then it also comes down to time, depending on all the other variables, if there's theta and vega that are chipping away. So say I had to wait 3 weeks before I got that up day in SPY and in Tesla. Well, by that point, there's no extrinsic value left, and I'm definitely not going to be able to roll for a credit anyway, even though I did it on an up day. So it is a balance of getting it done sooner rather than later. But of course not doing it too soon. These are things that there's no right answer. You figure out what's good for you and your account, and maybe that just means closing for a loss and moving on, keeping the Qualcomm and the Microsoft position. For me, I still believe in these positions. I don't believe they're that far off. They're that unrealistic. That all we need is some buying to come back into the market. But the market could continue to do what it does. And if it's continuing to go down, that could be it for this account. Obviously, I hope that it does not come to that, but that's the reality of trading. So with plug, we sold the 60 leg. So we need it to come the whole way up to here. Now we can move this line out. I'm going to hit edit here. Oh. Okay, I'm going to drag it out because that's too hard. Okay, April 16th. There we go. Okay, so now we need it to do something. Let me go to trend line. We need it to go something like that in order to be profitable, and that's possible. I'm not going to say that that's insanely realistic. So what might happen here is that we close for a smaller loss at this point, or we might roll it out again if the market looks like it's strong. You have to also understand that a lot of people think it grinds up slowly and then falls quickly, and that is true sometimes. However, there's definitely points like this where over the course of a week, between here and here, obviously that's a huge difference. So it is very possible for it to move up as fast as it went down. However, unlikely. But that's something that we'll judge as time goes on. So if I can reduce this loss from a $300 loss down to a $100 loss, that's still a win. But again, at this point, I don't know. We'll just continue to monitor the situation and see how things go. Okay, so for Tesla, for this one, rolled out for $50. Again, way more than what I would normally ever pay. That one we had collected $220, which normally I'm aiming for $160. So this is, both of these are still right within the realm of what I would normally put a position on for. The only difference is normally that price is associated with a low risk trade, something like 30% in the money, which means it has a 70% chance of success. At this point, it's the exact opposite, where it's a 20-30% chance of success. But those obviously our statistics are not always kind of what they appear at first. But But anyway, okay, so Tesla needs to get up to 785. Okay, so I have that up here in yellow, and let's go ahead and drag this out now. So we're still before earnings, which is great. And when we look at this line, the one thing that's concerning here is that we're currently below the 100-day. So if that, lines will very frequently pop under and then even for a couple days and then pop right back up. And that's not too concerning per se, but it's definitely something to start watching when it comes down here. If it, continues to roll over, something like that, then that's obviously an issue. But at this point, I definitely think this is possible for Tesla to go and be profitable before expiration. Yeah, I mean, there's just so much that could happen between now and then. I'm not throwing up my hands and quitting or anything like that. And as we can see here, the MACD and RSI are both oversold. Obviously, they can get even more oversold than that. But if you go back here at the very pit of the COVID crash, we were reaching these oversold levels that we're at now. So it's actually, technically speaking, it's actually pretty overdone. So, does that mean it's going to get worse? I don't know. Okay, so that's Tesla and Plug, which are now on the same expiration, giving ourselves 43 days. Let's go ahead and look at Microsoft really quickly and Qualcomm just to see where we're at. So Microsoft's 240. And we're actually sitting on the support really nicely, which kind of comes back through in here. But again, below the 50-day, which is not great. And this one isn't quite as oversold as what the others are. That's largely because it was so high. Go to Qualcomm. Okay, this one's probably the worst position. Yeah, down 196, 140. Okay. No, it doesn't have. I was thinking it had to get up to here, which would have been crazy. No, this isn't the worst position. Okay, so yeah, definitely think that this is 100% possible, something like that, and that would give us plenty of time before expiration to be profitable. Okay, so I'm trying to think if there's anything else here. Let me know if I missed anything, but that's really it. Yeah, obviously super disappointed, and yeah. I guess that's all I've got. But anyway, let me know if you have any questions, and I'll talk to you later.